There is a reason why you can't find a simple explanation behind sustainable investing, how to do it, how to get started. But in this video, I'm going to do my very best to explain why this is and to therefore try and break it down how you can get started with sustainable investing, be it either from a starting point or pivoting your portfolio. Hi, welcome back. My name is Zoe and this is my channel Words on Wealth, where I break down some complex investing topics into simple, no-nonsense, easy ways to understand them and to either get going with investing, to further your investing knowledge, or to keep building on your portfolio. So let's be honest, I'm a millennial, 30-something, and of course the climate is a big concern to me. I have for most of my life been bombarded with deforestation, trees coming down, and then of course into the last few years where we've seen the real impact of global warming and what that means for where we live, be it through floods, be it through deforestation, be it through impacts of hotter winters, wetter summers, more and more natural disasters across the globe, from wildfires, hurricanes. You get the idea, none of it sounds particularly great. I do my best to be a good citizen. Of course, I separate my recycling. I try wherever possible to eat a slightly more meat-free diet. I've investigated the likes of different sustainable solutions. I've even recently gone, for example, with a renewable deodorant rather than a plastic one every time. We all do our bit. But somehow it still feels like even what I do is a drop in the ocean, quite frankly, and there's always more that I could be doing. Not least of which with my money and my investments. And of course, because it's the thing that I spend most of my time thinking about. And I have no doubt it's exactly the same for all of you watching this today. There'll be a scale, there always is, but for most people it is a concern in some way, shape or form that the future of the planet is changing rapidly and that we're not doing enough to be able to stop it, and without a huge change to our lifestyle, which could be potentially quite difficult for most of us involved, there's not a lot that we can do. Yet we have started to see subtle shifts in the way that we talk about sustainable investing and what we can do with our money. Here in the UK, for example, there was a huge ad campaign with a famous actress, Olivia Colman, who was dripping in black goo. And this black goo was oil. And really what she was promoting was how people can pivot their pension investments into more sustainable solutions. It was hard hitting, and most people that saw it probably did think about it for those few minutes as to how and where the hell their money's going in the likes of their pension, other investments, and even with their banking as well. So I think most of us get it. Now is the time to act, because we're seeing more and more stats every year about how warming has gone past a certain threshold, or we're reaching a point where there's no return, and we all know the urgency. We all want to do something now, and so why not also look at your investments now too? I'm going to talk more about returns and the way in which the investments produce money in this video too. But for me, it's also a crucial point that's kind of being overlooked, probably because people are a bit too scared to say it because there's no guarantees, and also because there's no guarantees, it's just a theory of mine. But I basically believe that we've got no choice. What all of these headlines tell us is that we are going to have to dramatically change our lifestyle. We are going to have to see some key changes because the way in which we are living right now is not working from a planet human perspective. And so that is going to be changed. And what that means is that pivoting towards the likes of sustainable investments is likely, in my opinion, going to be the future. So loads of people question like, well, am I going to get the same returns if I go into sustainable investments? Their returns have been worse over the last 10 years. Surely it's not as good. And my answer to that would be, yeah, maybe not over the last 10 years where we're still living in ignorant bliss and nobody's really done all that much about climate change. But let's fast forward 30 years and we've got absolutely no choice but to have those sustainable solutions in place. Where will the performance be of those assets then? It's just my theory, but I'll allow you to ponder it. And as I say, for anybody that's like, what the hell is she on about now? I'll come back to talk about how sustainable investments can perform as well and how this can impact the overall growth of your investments and your portfolio. So there's a few key myths that I want to break down about sustainable investing before we get into this, because there's quite a few areas that I see people immediately get bogged down and into when they think about starting with sustainable investing. The first thing, and this is probably the biggest and kind of the trickiest to get your head around, which is why I'm going in deep end first, is basically that with just a quick pivot, sustainable investing, bam, done, ticked off the list. It doesn't work like that. As we know with recycling, for example, there is always decisions to make. We've always still got rubbish. Some bits of plastic can be recycled, some can't. What does it actually mean when they get recycled? Where do they get recycled to? How do they then produce other things? Do we use loads of energy in getting them to produce those things? And I'm not even a recycling expert, but you get the idea when it's something real. It's the same with sustainable investing. Get it out your head now that it's going to be a quick bam and done job. There are some quick fixes that you can do, but it's not going to be perfect. It's going to be a constant, steady switch, change, moving with the times and following what's going on, which I'm going to get into. So don't leave now. Keep listening, because although after this video you won't be able to do a quick tick and go, you will have some real clear takeaways that you can use to pivot your investments to more sustainable outcomes. And I think the other thing that people really get confused around is that idea of returns. And that is essentially how much your investments are making for you and whether being in more sustainable or otherwise investments will impact this for you. Ultimately, the human being is selfish, and I get that. We all have to make sure that we're protecting ourselves as well as considering the planet. And actually, it's relatively unusual that people are willing and able, indeed, to sacrifice all and any returns just in exchange for whatever outcome it is that they want, be it a more environmentally friendly one, be it a societal one. You get the idea. But as I break down in the next section some of the key parts of sustainable investing and what they can mean, hopefully you can start to take some of these ideas into your own investing and also really understand how they can also be taken on a scale in terms of where the sacrifice lays. How sustainable is it versus what returns are we going to get? And is it even a sacrifice that you need to make in that case? So let's get into it. What actually is sustainable investing? Because that in itself is a hugely broad term that can cover many different things. From the likes of green investing, where the focus is more on the environment, to socially responsible investing, where you're thinking about the overall impact on humanity, to the likes of impact investing, where the main goal is to just be improving whatever that money is going into, to socially responsible or conscious investing. It might also include the likes of Sharia investing, which is where it's aligned with Islam law and making sure that certain areas, including gambling, pornography and weaponry, are excluded from those investment decisions. So let's do some quick jargon busting around some of the terminology to do with sustainable investing. ESG is one that we commonly see, and this stands for environmental, social and corporate governance. And this is kind of an overarching term used in financial investing to cover off a whole number of sins, be it environmental topics, be it more social, be it more corporate governance. And you'll often see this acronym associated with sustainable investing. There is then also ethical investing, and this is generally more ethically conscious. There's not an official definition for this, or indeed many other terms within sustainable investing, but it's one to bear in mind that's slightly different to environmental investing, where environmental investing would probably prioritise the focus on environmental causes rather than social or otherwise. And the last bit of terminology to include in this is the UN's Sustainable Development Goals. Now, the UN Sustainable Development Goals are a huge level of goals that the United Nations created, and these are all targeting a more sustainable future. They cover a broad range of different topics, from female education to internet access to water usage to carbon emissions. You get the idea. It's well worth checking them out, and they have some nice little tables that do show them and run you through all of these different sustainable development goals. Now, what we see within investing is that a lot of sustainable strategies and a lot of sustainable filters all come through these UN development goals. And it's kind of a good benchmarking point to align yourself with if you are thinking of investing sustainably. For me, the easiest way to understand sustainable investing is to think of it as kind of a sliding scale of impact through to the kind of lowest form. So for me, at the far end of the scale is impact investing. And this is kind of the strongest form, or what many see as the strongest form of sustainable investing, whereby the money that is going into that investment is targeted purely at improving whatever that goal is, be it environmental, social, you get the idea. Within impact investing, often the likes of returns will be sacrificed in exchange for knowing that the money is going in a direction that the investor wants. We then move through to the more kind of targeted investing, where most investments within a portfolio or a fund are being chosen with sustainability, in whichever category that is, in mind. But actually, it's not necessarily the main goal. They still want some returns, and there is acceptance that there's different strategies within that as well. Some will be doing better, some will be doing worse. The next stage down is then just actively excluding the baddies, in inverted commas. So there will be no, for example, defence if you've got a particularly socially conscious portfolio. There might be no oil or non-renewable companies in there if you're thinking more environmentally. But it's actively getting rid of the bad, but not necessarily seeking the good. It's kind of that next stage down. And then last but not least, when we're thinking about sustainable investing, there is just no thought to it whatsoever. But if there's a bit in there, then fantastic, good, happy days. You're not actively looking for the baddies per se, but therefore you're not actively looking for the goodies either. So for today's video, I'm going to assume that most of us are talking about investing into stocks and funds that are mainly of stocks. I won't touch too much upon bonds, and I certainly won't go into the likes of commodities or property. If you do want me to talk about these in future, drop me a comment off after the video and I'll do my best to weave it into the schedule, because if there are people out there interested in what this could look like, I'm very keen to also talk about it. The reason why I'm talking about stocks and then stock funds, so I mean ETFs or actively managed funds, is because they are the way in which most of us will access any form of investing, but not least of which sustainable investing. They're also some of the most quantifiable, so if you are thinking, oh my gosh, it's an absolute minefield out there, they are some of the ways in which you can get through some of those dilemmas and quagmire of issues in a simple way. So let's start with how stocks are graded from a sustainable perspective. Normally what happens is that there are ratings agencies out there, so Sustainalytics, Corporate Knights are example of some of the agencies that run through certain companies' objectives and their sustainable outputs and outcomes. Now, increasingly companies produce these themselves, but often each and every company will produce their own rating system and give them a final score. This will be based on a whole range of criteria. Not only will it cover the criteria of different sustainable objectives, including those UN Sustainable Development Goals that I mentioned, but it will also include criteria such as whether they're focusing on it now, whether they're forecasting that they're going to focus on it, whether they're thinking about actually changing towards it and they've got a plan to do so, whether there's any impact on things like their supply chain into the business, because it goes so much beyond what just a business does. Let's take, for example, a luxury fashion company. Say that we're analysing what that company does and therefore how sustainable buying their stock would be. If we look at, for example, the goods that they produce, we could start to think, okay, well, do they make them in sweatshops and are their employees well treated, or actually are they making them in conditions that aren't particularly favourable? Let's then zoom over to what is the composition of their board like? Is it all men? Is it diverse? Or actually, are they seen as a relatively diverse company that has equal opportunities for different genders and minorities and disabled individuals as well? Then let's zoom over to the actual good that they're producing. Is it done in a way that is particularly water intensive? How bad or how good are their carbon emissions? How bad or how good are the carbon emissions of the materials that feed into the products that they eventually produce? And then let's pivot to their shops, which are sat on high streets. What do they look like? Have they got the heating on and the doors open the whole time? Or actually do they have lots of policies within those stores as to how sustainable they are? You can get the idea. There's an awful lot to look at, and that's why these scores can vary greatly. And that's why these scores will also likely change, because so do companies. So that's stocks. But I assume that the majority of us that are watching this video are investing into ETFs, funds, or taking a more long-term approach rather than a short-term day trading stock-based approach. But that's why I mentioned that I was going to talk about mostly therefore stock funds. So how I've talked there about how stocks kind of get filtered, graded for their sustainable output, that then all feeds into funds. So fund managers will firstly pick their strategy. Are they going for that really hard impact, or are they actually going for that lower form? Actually, we just need a little bit of sustainability exposure within it. You'll normally be able to find the strategy that the fund is following, whether it is passive or whether it's active, on the key information document. And this will give you an idea as to how strong or weak that sustainable selection process of the stocks that are feeding into the fund are. Then, once you've found their strategy and therefore what stocks might be feeding in, you can start to have a look yourself at any gradings that fund has been given. Now, across the Eurozone, for example, there is a clear sustainable grading system. They use Article 6, 8, and 9. Article 6 are where funds have absolutely no sustainable inclination whatsoever. Article 8 are where they have a little bit, they're focusing on it, but it's not the main goal. And Article 9 is that highest form, strongest form of focus on sustainable outcomes. I don't know what they did with Article 7. Seems really random to me that they just decided to skip one. But here we are. You can also normally see within the titles of funds as to whether they have some sort of sustainable or otherwise inclination. Now, these titles I leave to last because they can be misleading. It's often more helpful to look at the likes of the strategy, the composition, any gradings before looking at the title. More and more laws and changes from regulators have come in to try and make sure that funds aren't greenwashing, basically, and calling themselves green but not being green, but they can be misleading. What you'll often see within more sustainable funds is that they have huge levels of exposure to tech, and, surprise, surprise, you might even find oil companies in there. And all of this comes down to the strategy that they're following and also what approach they're taking in terms of that filtering. So how I mentioned that when stocks get given different scores, some of those scores will be to do with the likes of forecasts. Some of them will also be to do with how much is being spent on certain environmental objectives. So if we take Shell, and Shell, the oil company, may well have a fantastic forecasted plan as to how they're going to pivot towards net zero. They might already be proving that they're pumping X amount of revenues and profits into that, and as a result they get a really gold star, top of the class, great rating. But most of us will look at it and go, sorry, what? In a sustainable fund, there is an oil company that I know is responsible for some of the most major pollutions across the world. How does this work? And exactly that. You have to bear in mind that it's all based on that strategy, and that is why it's one of the key things to start looking at. But this brings me on to them, because I've bombarded you with quite a lot of information. You might be thinking, I don't feel like I'm any closer to knowing how to get going. And it's all about knowing your why. Because there's so many different things that sustainable investing can mean. There's many, many different areas of the targets of the United Nations Sustainable Development Goals, all very, very worthy. But the reality is that to have them all included and all equal priority is frankly impossible. So you have to pick yourself what is the most important for you. And you'll feel it in yourself. You'll know that there are some that you just resonate a little bit more with. Of course, you know deep down that they're all important. But that is one of the first things that you need to get to be able to establish your own sustainable investing plan. Work out what's important to you, work out what your why is, and then you can start filtering through the funds, the stocks, the strategies that work best for you and your sustainable alignment. Because the next big thing, and the thing that I think everybody doesn't like to talk about, is that there is always a compromise. There is no such thing as a perfect portfolio, a perfect company, a perfect fund. It just doesn't exist. You have to accept that whatever you invest in whatever way, there is some sort of compromise along the way. And this also needs constantly tweaking and keeping an eye on. Because, as I say, companies, funds, and strategies may well change. And that's fine, because the world is changing with it. And so it may well be that your portfolio starts out less sustainable than you'd like it to, but over a period of time, you pivot it to being more aligned with sustainability goals that you're happy with. Because it's a steady process, you find that more and more of the industry changes, you find more companies, more stocks, more funds, more strategies that work for you, and they're easier therefore to integrate. So what can you do after today's video then to make yourself a more sustainable investing portfolio? First, I'm going to start by assuming that you've never invested before. First things first, get yourself out there and start looking for some sort of place in which you can invest. Next up, it's about looking for your investments. Now, many beginners start with the likes of funds. These are just a big basket of stocks, bonds, and other assets. Often, as I mentioned, they'll be sustainable in the title, and you can start having a look through what strategies there may well be and whether they align with you. And then, third and foremost, you can start to build that portfolio, keep it diversified, still employ the other ideas of investing, such as make sure that you're looking at different geographical regions aligning with your risk profile, but keeping those sustainable visions in mind. And if you've already got an investing portfolio, what can you do? Well, the first thing you can do is assess what you've actually got and where it's up to. You can do this by digging into the titles, sustainable credentials of funds, or you could have a look at the stocks that you've got and compare them with ratings agencies' overviews. So see where you're at. The next thing you can then do is start to think about where you'd like to be. Form a plan of what does align with you, what you'd like to include more of, and what you'd like to include less of. And then from this, the third step is, of course, getting going. See it as a gradual process. We can't have it all. It may well be that it's something that you shift over time and you move towards so as not to cause a big shock through your portfolio if you find that there is no sustainable credentials whatsoever and you want to move towards more sustainable ones. It may well be that it's a steady attrition and you get there eventually. So there you have it, sustainable investing explained in a nutshell. It is one that I could talk about for hours, and there's so many different parts of it. This was just a kind of flavour, really, to what it could look like for you and how you can get going. Do make sure that you like and subscribe if you're enjoying these videos, and let me know in comments if you want more sustainable investing talk and what you want it on as well.